Hi everybody, HFR President Ken Heinz here with the February 2023 HFR 500 Performance Snapshot. February was an interesting month in hedge fund performance and overall financial markets. We saw really a return to a lot of the trends that dominated 2022, including correlated negative movements of fixed income and equities at the same time. That said, hedge funds had a strong performance month, and the performance profile was not identical, a little bit different than what we saw in 2022. While we had some of the same trends, including strong macro performance, we also had a new trend, which was strong event-driven performance, and overall, the HFR 500 outperformed equity and fixed income market declines for the month. Taking a look at February performance, you can see that the overall composite, including all strategies, posted a small decline of about 1/3%, that well outperforming the decline of U.S. equities we show here versus the Dow Jones decline of about 4.2%. Two strategy areas were actually positive for the month, which is really interesting given the volatility that occurred. Like we saw in 2022, macro strategies were positive when the market declined. These gained about 0.8%, meaning that they outperformed equity market decline by about 500 basis points. But the more interesting new trend was the outperformance that we've seen in the event-driven space. This actually gained over 40 basis points for the month, again, versus a decline of 4.2% for equities. Fixed income-based relative value strategies posted a very narrow decline. Here we have it 14 basis points exactly. And even equity hedge strategies, the highest degree of equity sensitivity across all the main strategies, declined 1.5%, which is a relatively minor decline given the large declines that we saw in overall U.S. equities in the month of February. We're going to talk a little bit more about the event-driven outperformance on the next slide. Going one level deeper and looking at the sub-strategy driver of performance for February 2023, we can see here last year's big winning strategy, the HFR 500 Macro Commodity Index, also gained 2.1% in February 2023. So continuing to see strong performance there. But the second leading area is actually event-driven special situations. And this is actually a really encouraging, exciting trend for us to watch in early 2023, because the special situations part of event-driven categorically has a very high degree of beta to equity market and credit markets overall. And we see here a gain of 1 2/3% when the overall market declined 4.2. It's a very strong and encouraging month of performance for this special situations area. Obviously, there's a lot going on in event-driven. There's been a fair number of activist campaigns in the first 2 months of the year, Salesforce being one of them, but there's a number of others where fund managers are getting involved in technology companies and really taking a large stake in those companies and demanding changes on the part of management. And so this is a trend that we expect to continue throughout 2023. Third leading area, the macro multi-strategy. You know, that's macro funds that are investing in both fundamental, systematic, commodity or currency strategies, or any combination of all of them. Those gained 1 1/8%, and then about 7/8% in another strong area of performance last year, macro systematic diversified. We know this is quantitative trend following CTA strategies. Again, strong performance continuing there. Then finally, relative value volatility gained about 85 basis points. This, as we know, is funds that trade volatility as an asset class. They're doing a lot of option trading here. And so those are the leading areas of sub-strategy performance for February. Looking at the first 2 months of 2023, you can see here the trend that we saw in February with regard to event-driven has really been something that has continued from January. So overall, the leading area of performance in February, event-driven at 2.9%, very strong gain in a year thus far where equities here represented by the Dow have declined 1.5%. Similarly, equity hedge, even with the decline in the month of February, is also up 2 1/8%, 184 for the overall composite. So you can see the composite of all hedge fund strategies for the year, significantly outperforming equity and fixed income market declines. Relative value arbitrage, the most interest rate sensitive area of the hedge fund industry, of 1.3%, and then about 90 basis points in macro, which we know was the leading area of performance in the month of February. So we've seen significantly different markets in January and February thus far, and what we can see here is that hedge funds have adapted their exposures and done well through the first couple of months of the year. Finally, drilling down to the sub-strategy drivers of performance thus far for the year, we can see that the drivers of performance are really dominated, as you would expect, by the event-driven area. We can see here event-driven multi-strategy, gain of 6% thus far for the year. So very strong performance there. And as we know, the multi-strategy and event-driven is a grouping of funds that have portfolios in each of the different or multiple of the different sub-strategies of event-driven, many of those which you see represented here as leading areas of performance. Equity hedge, quantitative, directional, those are strategies that are quantitative in nature, but they are not they're not market neutral. As a matter of fact, they're the opposite of market neutral. They're very directional strategies and quantitative in nature. Gain of 5% for those, again, in the first 2 months of the year. Activists, we talked a little bit about activists on the last slide, 4.75% gain thus far for the year. Again, number of campaigns have kicked off thus far for the year. Salesforce being a big one with multiple activists involved, but there's others as well. And we expect that to be a trend that's going to continue in 2023. And then a gain of about 4% in event-driven special situations, which again, very encouraging because categorically event-driven special situations has a fair degree of beta to equity markets. And we can see that thus far for 2023, it's been inversely correlated to the decline in equity markets, which is very exciting. And then finally, the fifth leading area of sub-strategy performance is fundamental value. Again, these declined in February, so the gain of 3.2 is just to say that the net of that decline with the strong gain in January still makes it a top area of performance for 2023. There's a lot of great information on our website for the Investable HFR 500 indices. If you're watching this video, you know we do regular performance updates of HFRI 500 performance on a monthly basis. Please subscribe to the channel, and if you have questions, please feel free to direct those to us. Visit the website, www.hfr.com. If you have questions and you'd like to set up a call, you can email me, Ken Heinz. You can email other people that you're in contact with at HFR, or you can email HFR500@hfr.com. Finally, the investor guidebook. Please visit that part of the that page of the website. You can download that book. It's got a lot of great information on how institutions are switching their benchmark to the Investable HFR 500 and how the HFR 500 is really a solution for a lot of common benchmarking challenges that institutions face. Thanks for watching and look forward to speaking with you next month.